CRO just surged over 160%, then crashed 12% overnight, while both crypto whales and everyday investors poured billions into the token. What is really going on beneath the surface? In just one wild week, Cronos exploded from under 30 cents to as high as 36 cents, fueled by the Trump family's massive $6.4 billion CRO treasury deal. Headlines everywhere call it the turning point for CRO, with daily trading volume spiking by over 2,000% and spot buyers snapping up more than $24 million worth in a matter of days. But here's what most people miss. While the spot market keeps accumulating, the derivatives market is bleeding out. According to AMB Crypto, CRO's recent week price performance has been largely driven by massive liquidity outflows from the derivatives market. Open interest in CRO futures plunged by $20 million in just one day, signaling serious uncertainty as leveraged traders bail out to avoid getting liquidated. This creates a dangerous split: spot investors chasing the hype while derivatives traders are dumping risk. Is this the start of a truly historic rally, or just a classic setup for a brutal reversal, with latecomers left holding the bag? If you rush in blindly now, you could catch the next breakout or get wiped out by a sudden dump. So what is really fueling this roller coaster? And how do you avoid the trap that could catch even seasoned traders off guard? Let's dig into the hidden forces driving CRO's wild price moves and reveal the critical signals most traders are missing right now. What turned a quiet altcoin into the center of a $6.4 billion headline? And why did some traders get rich while others got burned? Let's set the scene. Cronos, or CRO, was once a background player in the crypto world, but over the past week, it has exploded into the spotlight with wild price swings driven by one of the industry's most controversial partnerships. Just days ago, CRO made headlines everywhere after Trump Media and Technology Group, Crypto.com, and Yorkville Acquisition announced a plan to establish a CRO treasury strategy with up to $6.4 billion in funding. The numbers are jaw-dropping. Reports show CRO's price jumped by as much as 42% within hours of the announcement. Trading volumes didn't just rise, they erupted, with daily volumes soaring by 850% to over $400 million. One headline called it a 165% rally and a 2,000% volume spike, numbers that most altcoins never see in a lifetime. But behind the euphoria, there's chaos. Just as quickly as CRO rocketed higher, it also suffered gut-wrenching reversals. In less than a day, CRO crashed by 12%, wiping out millions in value. And while the headlines focus on the partnership's billions, traders on both sides of the market are fighting for control. Some making fortunes on the boom, others getting liquidated in the crash. What explains these violent swings? To understand, you have to know how two distinct markets, the spot market and the derivatives market, drive the action. The spot market is where people buy and sell real CRO tokens, typically to build long-term positions. When news of the Trump partnership broke, spot investors piled in, buying tens of millions of dollars worth of CRO. In fact, in just 24 hours, spot buyers accumulated over $4 million in CRO, and the next day, they ramped up to more than 11 million, the highest single-day haul on record. Over the week, spot accumulation crossed $24 million, a clear sign that some players are betting on CRO's long-term story. Meanwhile, the derivatives market tells a different story. Here, traders use contracts to bet on CRO's price going up or down, often with high leverage. When the price spiked, open interest in CRO derivatives ballooned, but soon after, liquidity started leaking out fast. Open interest dropped by about $20 million, signaling traders were rushing to close positions and avoid being wiped out by sudden market reversals. This tug-of-war is what fuels CRO's staggering volatility. The spot market's demand pushes prices higher, while the derivatives market's liquidations can trigger sharp pullbacks. As one analysis put it, Cronos price surged 30% in 24 hours, but a 100% drop in buying pressure signals a 10% pullback risk. The key point? There's a growing rift between spot buyers, who are accumulating for the long term, and derivatives traders, who are more cautious or outright bearish. Some analysts say that despite the pullbacks, spot accumulation and positive funding rates in the derivatives market suggest another strong rally could be brewing. Others warn that these headline-driven spikes may be short-lived, especially if derivatives sell-offs accelerate. If you don't understand this clash, you could easily mistake a PR-fueled surge for lasting growth, or worse, jump in right before another brutal reversal. In crypto, that kind of mistake can cost you both money and credibility. But underneath the headlines, there's a battle raging, one that could decide CRO's fate. Let's see who's really in control, spot buyers or derivatives traders. To figure out who ultimately wins and whether CRO's rebound has real staying power, we need to look deeper at the signs from both spot and derivatives markets. The battle lines are drawn, but which side has the upper hand? What if the crowd is charging in just as the pros are quietly slipping away? Right now, millions of dollars are flooding into CRO from spot investors, even as seasoned traders stampede for the exit. If you misread this split, you could either catch a life-changing rally or get wiped out in a matter of hours. Let's dissect what's really dividing the market. On one side, spot buyers have poured more than $24 million into CRO in just 1 week, with over $4 million added in the last 24 hours alone. This relentless accumulation is a daring wager that the Trump media partnership and a $6.4 billion treasury move will spark a surge, and missing it could mean missing out on a generational crypto run. But dig deeper, and the derivatives market paints a starkly different picture. Open interest has plunged by about $20 million, now sitting at just $157 million. This isn't a gentle leak, it's a full-scale retreat, as leverage traders scramble to dodge sudden liquidations and the brutal whipsaws of volatility. Numbers confirm the fear. The long-to-short ratio is barely under 1, at 0.98, showing sellers have overtaken buyers. Trading volume keeps slipping, and confidence among derivatives players is eroding fast. As AMB Crypto puts it, a significant outflow usually reflects uncertainty in the market, as traders avoid liquidation risks. This tug-of-war is unleashing violent price swings. CRO recently soared by more than 100% in mere days, only to crash 12% in a single session after derivatives liquidity vanished. According to the Coin Republic, a 100% drop in buying pressure signals a 10% pullback risk. If spot buyers are wrong, a sudden rush of derivative selling could erase millions in paper gains instantly. So why are spot investors still so fearless? Partly, it's the sentiment data. The open interest-weighted funding rate has edged slightly positive at 0.0006%, hinting some traders are still betting long. Meanwhile, the headlines, Trump media's $6.4 billion treasury, eye-popping rallies, and surging volumes are stoking the FOMO. But no amount of buzz can shield you from the volatility that derivatives-driven sell-offs unleash. If you're betting on CRO's rebound, you're picking a side in a high-stakes showdown. The risk? Getting trapped in a violent reversal if the derivatives crowd triggers a cascading sell-off. The rewards are massive, but so is the danger. Derivatives market swings can vaporize spot portfolio gains in hours, not days. So, which side has the edge, and what outcomes should you actually prepare for? Let's map out the possible scenarios. The next act breaks down the most likely paths CRO could take from here, and what you can do to avoid getting blindsided. Is CRO about to moon? Or is a painful retracement lurking just beneath the hype? Right now, the future of Cronos hangs in the balance between a sustainable rally and a potential liquidity trap. On one side, explosive news like the Trump media partnership, a deal valued at over $6 billion, has sent CRO soaring by as much as 140%, reigniting hopes of reaching that elusive $1 target. The roadmap update and ecosystem buzz have pushed CRO to its highest peak in over a year, bringing bullish sentiment and massive trading volumes into the spotlight. But beneath this surge, the market's foundation is far from stable. Evidence shows that spot investors are aggressively accumulating CRO, pouring in over $24 million in a single week. Meanwhile, derivatives traders are heading for the exits, yanking out $20 million in open interest and signaling growing caution. This split creates a dangerous rift. Bullish spot momentum could be building a launchpad or just setting a trap for the unwary. Why the tension? In the short term, a sharp rally, like the ones we just witnessed, can leave deep liquidity gaps below current price levels. If CRO fails to consolidate, any sudden reversal could trigger a fast and brutal retracement as the market rushes to fill those empty spots. As one analysis warns, a sharp rally at this stage would leave significant liquidity gaps below. This scenario implies that even after a strong move higher, CRO could face a steep pullback. Yet there's another possible path. A deeper decline now could actually set the stage for a healthier rebound. If CRO sweeps out lower-level liquidity clusters, essentially clearing out weak hands and speculative positions, it may be able to mount a sustainable push upward, supported by genuine accumulation and positive funding flows. As AMB Crypto points out, a deeper decline may ultimately benefit the asset, clearing out lower-level liquidity clusters before CRO makes a more sustainable push upward. So what could tip the scales? New catalysts, like further high-profile partnerships, continued spot accumulation, or real-world ecosystem growth can inject enough confidence to fuel another leg up. On the other hand, if hype runs ahead of fundamentals and the derivatives market keeps bleeding, we could see FOMO buyers get trapped at the top just before a painful fall. The stakes could not be higher. Pick the wrong future, and you risk buying into a frenzy, only to be left holding the bag, or selling just before the next big rally. The difference could mean missing out on life-changing profits, or suffering a reputation-bruising loss in front of your crypto peers. But with so much at stake and so many conflicting signals, how can you actually cut through the noise and make smarter moves in this market? Let's break down actionable strategies you can use right now. What would a data-driven CRO strategy actually look like, beyond the headlines and hype? Let's break it down with practical frameworks and real-world signals. First, you need to separate spot market activity from what's happening in derivatives. Recent analysis shows that while derivatives markets saw a massive outflow, about $20 million, spot investors have quietly accumulated over $24 million worth of CRO in just 1 week. This divergence is crucial. If you only focus on the surges and dips from headline deals, like the Trump Media and Crypto.com partnership, you miss what the smart money is doing underneath. Spot accumulation, those steady buys by investors not using leverage, often reveals long-term conviction. In contrast, derivatives outflows signal nervous traders closing positions or getting liquidated, which can drag price down temporarily. So how do you read these signals? Start with the open interest-weighted funding rate. Right now, it is slightly positive, suggesting that more traders are willing to pay a premium for long positions rather than shorting CRO. This aligns with the observation from AMB Crypto that, despite a sharp 12% pullback, signs point to a possible recovery for CRO. But you also want to watch for liquidity gaps. If price drops quickly and leaves a void, meaning few buy or sell orders in that zone, it becomes a risk for sudden reversals. A deeper decline can actually create a healthier setup, clearing out weak hands and allowing for a stronger, more sustained rally later. On the flip side, if CRO rockets upward without filling those gaps, beware. Sharp rallies often retrace to fill those empty zones, causing rapid drops that catch late buyers off guard. To make informed trades, use a simple checklist. 1. Track spot accumulation versus derivatives outflows using on-chain data. 2. Check funding rates for directional bias. And 3. Map out liquidity clusters on the chart to anticipate where explosive moves might stall or snap back. As Alayuwola notes, robust analysis with both technical tools and on-chain data gives you an edge, helping you act based on evidence, not emotions or viral news. By drilling into these frameworks, you avoid being exit liquidity for whales and put yourself in position to catch sustainable upside moves, not just speculative pumps. So, with all this in mind, what specific steps can you take right now to navigate CRO's volatile market? Let's break it down. Before you get swept up in the headlines, ask yourself, will you profit or get burned by this $6.4 billion partnership? The stakes are real. Fortunes can be made or lost in minutes if you misread the next Cronos move. Here's the big question. Is this Cronos rally built to last? Or is it a classic bull trap waiting to snap shut? Over the past week, Cronos skyrocketed by more than 160% after the Trump media and crypto.com deal, with daily trading volume exploding over 800%. Yet, in just 24 hours, Cronos tumbled 12% as $20 million exited the derivatives market, showing how quickly the tide can turn. Spot buyers are going all in, snapping up more than $24 million worth of Cronos in 1 week, the biggest accumulation this year. Funding rates have turned bullish, signaling that many traders are betting on more upside ahead. But lurking below, derivatives traders are flashing warnings. Open interest has plunged, and the long-to-short ratio reveals more sellers than buyers. This intense standoff means volatility is far from over. A sharp drop could shake out weak hands and prepare for a true rally, while a premature surge now could leave new buyers trapped if the market collapses to fill liquidity gaps. What's your best move? Stay nimble. Ignore the hype and monitor both spot accumulation and derivatives flows. The true winners will be those who spot the turn before the crowd, not those chasing the story after the fact. In a market this wild, your vigilance is the difference between riding a historic rally and becoming the exit liquidity in the next brutal dump. If you want to turn volatility into opportunity, don't just follow the noise, watch the signals that really matter. Up next, let's break down the exact indicators you should track to stay ahead of the next Cronos move.